go over some Sundial conference, the earnings, Q1 earnings, talk on some points to know because obviously it was kind of mixed, and obviously based on looking at the after hours activity yesterday, had a little bit of a dip. So we were up roughly about 20+% yesterday. After hours down 11%. This morning, a little bit better for economic data, more associated to retail sales, which is giving Sundial a nice boost. It's starting to go back down, but I think a lot of people are going to be watching and listening in on their upcoming earnings. So that is a very big, important point in my opinion. Making sure you guys hit that thumbs up and subscribe though, all that fun stuff. So just a quick summary in case you guys do not know, they did submit their earnings yesterday. Some good positives, some good takeaways. So 𝗖𝗓𝗡𝗘𝗖𝗧 is now incorporated into their earnings, especially going forward as well. They, unfortunately, some negatives that does come apparent to us is SUNSTREAM. So even during their last earnings, they said that SUNSTREAM is getting a lot more inquiries for lending, but we all know the cannabis sector has been suffering for a while now. Sundial has been doing fairly well compared to a lot of other cannabis companies. So I think the mere fact is that it'll take time. But SUNSTREAM did take a loss of around 17 million. So that's something to kind of watch as well. They did have around 1 billion in cash, and obviously with their amount of cash, they could still do the share buyback. That is kind of a different thing. I've covered a lot of stocks, watched a lot of stocks, been investing for quite some time, but when it comes down to Sundial, even last earnings, they said that as far as in doing a share buyback, they would kind of count the cash that was part of the 𝗖𝗓𝗡𝗘𝗖𝗧 deal as part of the buyback, which works in theory, but it's kind of more of a backwards way. Now, I've never even heard of a company doing this, but they are going to be doing selling put. So in case you guys don't know options, highly suggest in researching that. But by selling puts, it no way guarantees what price or anything that it can be done at. So, like I said, I think there's going to be, in about 4 minutes, their upcoming earnings. It's going to be, a lot of people are going to be very interested in watching that and listening to that. But, and hopefully they elaborate on this, like I said, that share buyback program. So, it's an interesting thing. So, in theory, looking at some of the options activity, because of the share price of where Sundial is, the minimum amount of strike price is 50 cents. We're obviously below that right now. So when they are saying that they're going to be selling a put, they are saying that hypothetically, they're assuming it's going to be above $50 cents. And then if that's the case, then it gets exercised. So that's where they can do the share buyback. But that is only under the assumption that we will be over the 50 cents. So it's very, very interesting. I've never seen any company do that. The repurchase program, as far as that, incorporating options, selling puts, because even selling puts, it could be done, but depending on the strike price and everything, that they most likely could even just get additional revenue from that just by premiums if we do stay below the 50 cent. But yeah, it's, I don't know, a lot of different things, a lot of exciting things. But overall, I think one takeaway is, again, their cannabis sector is suffering. So this is why they had a loss, because previous earnings, more specifically the Q3 and Q4, what has happened and the nice trend has been on, their external sources of revenue have really saved them, which is SUNSTREAM. And now SUNSTREAM they had a 17 million loss. So that, in combination with, as far as lower revenue from cannabis, it doesn't help the situation whatsoever. And yeah, I'm a very big fan of Sundial. That's why I still continue to do Sundial videos. It'll be, like I said, very interesting to see what their future guidance is, which was basically about 3 weeks ago. There was their previous earnings, and even at that stage, Zach did say that they're going to be kind of scaling back, not expanding at such a fast rate that they were expecting to be because of inflation, unfortunately. So that might also be tied in and linked to Sundial, or SUNSTREAM, I should say. But about 2 more minutes left, and then we'll be able to see what happens. You can see as far as the overall volume today, it's crazy. 52.2 or 52.3 million shares. Average is 89, so very heavy day for Sundial. But the odd thing is, given previous situations, usually Sundials run fairly strong when given a lot of inflow of capital. So I'm just going to bring this up because this has been plaguing a lot of companies. So right now, shorts don't really know what to take. So it's actually oddly zero, minorly increasing, 32,000 shares, very low short interest, very low cost to borrow. And since cost to borrow minimum, average and max are all the same, there's only one broker offering Sundial shares out there to short. Utilization is 90.69. So what is some of your good takeaways from the earnings? Are you guys just interested in that? There was some good things to point out though, but with them, I don't really get into all of that because with there being only 1 minute left before the earnings starts. But personally, my own opinion, I think there was some good takeaways. Zach already kind of alluded to SUNSTREAM kind of losing as much. I think if you don't pay attention to anything, they had a net loss ultimately. Was less than previous though, so that's a good kind of trend. It still showed a lot of good trend and momentum on a lot of different numbers, but I think the takeaways are SUNSTREAM and their share buyback was a little bit more interesting. Cannabis sales again continuing to go down. That's been roughly about 4 quarters that it's been continuously going down, largely because of the actual product becoming cheaper as well, and just less kind of potential demand there. They haven't really alluded to that in here, so it'll be interesting to see what their conference does say and how they're going to word it. But you know what? I think with Sundial, the reason why I still do Sundial because same reason in my videos. I say it's like a long-term investment. Short-term might be volatile, but nobody ever, no YouTuber, no analyst ever knows when Sundial is going to rally. It's a sleeping giant. It's always been that. Has a good fundamental business, very good fundamental business actually. It just needs a little push, and you never know when that push is going to come. So I think this is why I still do videos, because you never know when that is going to just take off, and this has it. This has the ability to do that. So oddly enough, after the previous earnings, we did get a couple good analysts pretty much the day of, whereas in this case, we unfortunately didn't. So Interactive Brokers shows all the analyst ratings, and it does look like the earnings call is starting. So I will mute myself.
2022 Financial Results Conference Call. Yesterday, Sundial issued a press release announcing their financial results for the first quarter ended on March 31, 2022. This press release is available on the company's website at sndlgroup.com and filed on EDGAR and SEDAR as well. The webcast replay of the conference call will also be available on the sndlgroup.com website. Sundial has also posted a supplemental investor presentation found on the sndlgroup.com website. Presenting on this morning's call, we have Zach George, Chief Executive Officer, Jim Keough, Chief Financial Officer, and Andrew Stordeur, President and Chief Operating Officer. Before we start, I would like to remind investors that certain matters discussed in today's conference call or answers that may be given to questions could constitute forward-looking statements. Actual results could differ materially from those anticipated. Risk factors that could affect results are detailed in the company's financial reports and other public filings that are made available on SEDAR and EDGAR. Additionally, all financial figures mentioned are in Canadian dollars unless otherwise indicated. We will now make prepared remarks and then we'll move on to analyst questions. I would now like to turn the call over to Zach George.
Good morning, everyone, and thank you for joining us on our first quarter 2022 earnings call. The first quarter of 2022 was both transformational and transitional for Sundial. Through our acquisition of 𝗖𝗓𝗡𝗘𝗖𝗧, Sundial is now Canada's largest private sector distributor of both liquor and cannabis with an industry-leading balance sheet and access to capital. In terms of results, our net revenue was $17.6 million, including 1 day of revenue from the acquisition of 𝗖𝗓𝗡𝗘𝗧 on March 31st, which represents an increase of over 78% over the first quarter of 2021. Had the acquisition of 𝗖𝗓𝗡𝗘𝗧 occurred on January 1st, 2022, revenue would have increased by approximately $162 million. A single day of contribution from 𝗖𝗓𝗡𝗃 and Nova in Q1 amounted to approximately $2 million in revenue. One of the most powerful highlights of this quarter is the material improvement in gross margins in our cannabis operations. While we have a significant amount of work yet to do, we have reduced costs and created a more balanced and diverse product mix that focuses on higher margin, higher quality cannabis. Our cultivation techniques and processes continue to be refined, and we achieved our all-time highest average THC potency results of approximately 24% in Q1. I am proud of our team at our facility in Olds, Alberta, and I would now put the quality of our flower up against any of our competitors. The cannabis retail experience and infrastructure acquired through Spiritleaf in 2021 have now been bolstered with the 𝗖𝗓𝗡𝗃 Nova acquisition. The transaction has materially improved our talent density, and these combined banners represent the largest cannabis retail network in Canada, with average daily transactions north of 21,000 during Q1 and more than 900,000 in average daily revenue. The insights gained from this critical distribution infrastructure will be key to owning the customer relationship. Across a broader retail value chain in cannabis and liquor, Sundial now has access to unique insights into tens of thousands of daily shopper transactions at over 350 retail stores. This will enable us to optimize offerings, pricing, and promotions in both liquor and cannabis locations to better serve customers. The company's access to a larger customer base also provides us with a strong foundation for e-commerce and direct-to-consumer strategies that will improve Sundial's competitiveness. Additionally, we will continue to assess private label opportunities and develop targeted merchandising strategies for our entire retail portfolio. We remain committed to the development and support of the Spiritleaf and Value Buds banners. Following a 2-year break due to COVID, we are thrilled to welcome our Spiritleaf franchise partners to Calgary in June for our Circle event, which will facilitate strategic discussions, education, and engagement with Canada's top LPs. Nova's Value Buds banner has been highly disruptive in the Canadian industry and has become an absolute velocity machine in Alberta, with a current average annual run rate of around $3 million per store, which is more than twice as much as the average retail door in the province. In less than 2 months, we have been able to increase branded product distribution by shipping products to Value Buds stores and have started to realize synergies against an integration plan that will be a focus for the balance of the year. By the end of the first quarter of 2022, Sundial had deployed capital on several cannabis-related investments, resulting in a total of $650.2 million, including about $453 million to the SUNSTREAM Bancorp joint venture. For the first quarter of 2022, the investment portfolio generated interest and fee revenue of $3.9 million, equity pickup of $4.1 million from SUNSTREAM, and an investment loss of $17.7 million on marketable securities, which includes unrealized losses on previously publicly disclosed strategic investments in Village Farms International and the Balance Company. The current rising interest rate environment has caused us to make non-cash accounting adjustments to our largely fixed-rate SUNSTREAM portfolio, resulting in muted adjusted EBITDA contribution for the quarter. SUNSTREAM remains the largest Canadian-funded credit portfolio in the industry. Given rising interest rates and geopolitical turmoil, as well as the cannabis industry being rife with challenges such as oversupply, price compression, and saturation in the retail market, cannabis equity valuations have been under extreme pressure. As our investors are well aware, Sundial has not been immune to these market challenges. While our shares have outperformed global and Canadian cannabis indices on a 1-year and year-to-date basis through May 13th, We believe that we are undervalued and are committed to the relentless pursuit of shareholder value creation. Sundial's debt-free balance sheet and ample cash reserves place us in an enviable position as we witness a violent and swift reckoning taking hold in the Canadian cannabis market. Continued aggressive cash consumption by our peers, reduced access to capital, and waning investor risk appetite are likely to accelerate sector rationalization as the industry slowly moves towards the formation of an oligopoly. While the Canadian sector is difficult and may be entering its darkest hours, the industry's rate of change is showing no signs of slowing down and will likely look vastly different over the next 12 to 24 months. We are keenly focused on the future state of our business and the industry as we focus on delighting consumers. Before I close, I'd like to provide an update on the previously announced share repurchase program. In light of Sundial's management views on the company's liquidity, assets, operations, and the recent trading price of our equity, we view the repurchase of shares as an accretive use of capital. In addition, the company recently sought approval from the Alberta and Ontario Securities Commissions to enable Sundial to sell put options to enhance this program. In summation, we remain optimistic about the future of regulated products in Canada. Sundial remains focused on building long-term shareholder value through vertical integration, including the expansion of our retail network, the further streamlining of the company's operating structure, and an enhanced offering of high-quality brands to consumers. Thank you, and I'll pass the call to Jim for comments on our financial results.
Thank you, Zach, and good morning, everyone. I'd like to remind you that all amounts that I discuss today are denominated in Canadian dollars unless otherwise stated. Certain amounts that I will refer to on this call are non-IFRS GAAP measures. Please refer to Sundial's management discussion and analysis for the definitions of these measures. On the last day of March 2022, Sundial acquired 𝗖𝗓𝗡𝗘𝗖𝗧 Inc. and its 63% owned subsidiary, Nova Cannabis Inc., and we are now reflecting a fourth operating segment, liquor retail. With the acquisition, Sundial is Canada's leading private regulated products retail platform. Please note that the 𝗖𝗓𝗡𝗘𝗖𝗧 and Nova inclusions are comprised of just 1 day of operations following the acquisition on March 31st, 2022. However, I will also discuss the estimated full first quarter 2022 results for these entities. I'll begin with our consolidated results. Net revenue for the first quarter of 2022 was $17.6 million, including the 1 day of revenue on the acquisition of 𝗖𝗓𝗡𝗘𝗖𝗧, an increase of 78% over the first quarter of 2021. Had the acquisition of 𝗖𝗓𝗡𝗖𝗧 occurred on January 1st, 2022, revenue would have been approximately $164 million and gross margin would have been approximately $36 million. Our gross margin improved to $3.4 million for the first quarter of 2022 compared to a loss of $3.5 million in the first quarter of 2021, a 200% improvement. We reported a reduced net loss of $38 million for the first quarter of 2022 compared to a $134 million loss in the first quarter of 2021. The $96 million improvement in net loss is primarily due to a net revenue increase of $7.7 million, share of profit from SUNSTREAM of $4.1 million in 2022, and a non-cash change in fair value of derivative warrant liabilities of $122 million. This is partially offset by a downward change in investment revenue of $31 million and higher general and administrative expenses of $3.6 million. We had an adjusted EBITDA loss of $0.7 million for the first quarter of 2022, compared to adjusted EBITDA of $3.3 million in the first quarter of 2021. The decrease was largely driven by fair value adjustments and central bank interest rate changes related to the SUNSTREAM joint venture in 2022, as well as realized gains on disposition of marketable securities in 2021. General and administrative expenses for the 3 months ended March 31st, 2022 were $10.7 million compared to $7.1 million for the 3 months ended March 31, 2021. The increase of $3.6 million was mainly due to increases in salaries and wages, office and general, and professional fees due to the acquisition of Inner Spirit Holdings in July 2021, and to a lesser extent, to 1 day of 𝗖𝗓𝗡𝗖𝗧 following the acquisition. The increase in professional fees was largely due to the completion of our year-end audit. Sundial had just over $1 billion of cash, marketable securities, and long-term investments, and no outstanding debt at March 31, 2022. And we had $361 million of unrestricted cash at May 13th. Now let's turn to cannabis cultivation and production. Gross margin for the first quarter of 2022 was negative $0.2 million compared to negative $3.5 million for the 3 months ended March 31, 2021. The improvement demonstrates Sundial's progress in supply chain and cost optimization despite price compression and lower revenue. Andrew will provide more details on the improvements we have achieved to date. Gross revenue for the cultivation and production of cannabis was $11.3 million for the first quarter of 2022, a small decrease of 3% compared to the first quarter of 2021. This reflects a further shift to branded product sales compared to the first quarter of the prior year. Sundial has terminated the service and sale agreement between Sundial and Sun8 Holdings Inc. for consideration of approximately $3.1 million in cash and $2.9 million of Sundial shares. Sundial has decontracted the royalty and eliminated the annual royalty fee that Sundial was paying to Sun8, which was $2.6 million in 2021. Our cannabis retail results, including 1 day of Nova, are as follows. Gross revenue for the 3 months ended March 31st, 2022 was $7.5 million, including $0.7 million representing 1 day of sales for Nova. Gross margin for the first quarter of 2022 was $3.3 million. And system-wide retail sales were $34.6 million for the first quarter of 2022, including that 1 day of Nova revenue. The Nova retail store results for 1 day were gross revenue of $0.7 million and gross margin of $0.2 million. And while Sundial does not account for the results of the Nova retail stores prior to the acquisition date, the Nova results for the full quarter were gross revenue of $49.8 million and gross margin of $9.4 million, or 18.8% of sales. As for our 1 day of liquor retail results, gross revenue was $1.3 million and gross margin was $0.3 million. Again, while Sundial does not account for the results of the liquor retail segment prior to the acquisition date, the results of 𝗖𝗢𝗡𝗃's retail locations for Q1 were as follows. Gross revenue for the Ace Liquor, Wine and Beyond, and Liquor Depot banners was $115 million, and gross margin was $27 million, or 24.1% of sales. And finally, I'd like to review our investment operations. By the end of the first quarter of 2022, the company had deployed capital on cannabis-related investments totaling $650 million, including $453 million to the SUNSTREAM Bancorp Inc. joint venture. Revenue from investments and loans in the first quarter of 2022 was a negative $9.8 million. This is comprised of $3.9 million of interest on credits held directly by Sundial, $4.1 million on share of profit from the SUNSTREAM joint venture, and unrealized losses of $17.8 million from investments in marketable securities which are marked to market. Downward performance of share prices from our strategic equity portfolio of Canadian cannabis-related investments resulted in these unrealized losses. I would now like to invite Andrew to provide further remarks related to cannabis operations.
Thank you, Jim. I'm pleased with our team's continued execution and commitment to cultivation excellence this past quarter. Our cannabis operations are continuing to build momentum as we remain focused on driving to a sustainable, profitable business. The Canadian cannabis market remains volatile, with too much low-quality product and geographical pockets of high retail saturation. These headwinds pose challenges, but they have also forced our business to be opportunistic by differentiating through product, pricing, and a better understanding of the consumer and customer needs. Our average net selling price in the first quarter of 2022 increased by 5% versus the first quarter of 2021 and showed an 11% increase compared to the fourth quarter 2021. This pricing and mix focus supported material improvements in our gross margin on a year-over-year basis, with the first quarter of 2022 at negative $0.2 million compared to negative $3.5 million in the first quarter of 2021. We are making progress with our gross margins in cannabis operations, with more work required. While our overall revenue increased, our cannabis cultivation and production revenue decreased slightly by 3% compared to last year, mainly due to industry declines, most notably in the province of Quebec, as January and February industry sales in that province declined by about 3% as measured by Stats Canada. From a quarter-over-quarter standpoint, we had some one-time factors through a previously announced licensing service agreement that positively impacted Q4 2021 revenue that was not repeated in Q1 2022. Accounting for this one-time factor, our net revenue for cannabis operations is stable on a sequential basis and reflects the early progress and commitment to executing our retail vertical integration strategy across Western Canada and Ontario. We have a strong plan that our team continues to execute against, underpinned by the 5 key initiatives announced at our year-end update. Now, let me walk you through these initiatives and provide some additional context against each. We continue to make progress with our cultivation excellence focus. This has contributed to an improvement in our cultivation consistency, with Sundial's highest average weight and potency results achieved in the first quarter of 2022, coming in at 23.9% THC. This represents a 1.5% increase from the previous quarter. Further, Sundial's average weighted yield per square foot broke a new record for Sundial in March 2022, with a weighted average yield of 64 grams per square foot. As we continue to focus on cost, we have made significant progress in optimizing costs on pre-roll packaging and processes. From an operational standpoint, we continue to identify significant cost savings beyond our synergy initiatives. The company has made material improvements in its cultivation and innovation pipeline, which is contributing to an enhanced product portfolio nationally. In Q1 2022, priority SKU distribution increased nationally by 1,389 points of distribution as measured by internal CRM reporting. Further, we continue to partner effectively with provincial boards, securing 159 new inhalable product listings nationally year to date. This innovation success rate represents a 92% strike rate versus the company's plan in an industry where provinces and retailers continue to scrutinize and rationalize SKUs. Western Canada represents the largest gain on new listings year to date, with 104 SKUs, followed by OCS with 20 SKUs, SQDC with 8 SKUs, and Atlantic Canada with 27 SKUs. Our vertical integration strategy is proving fruitful, and we expect to see better results in the coming quarters. Sundial continued to see brand share increases for its house brand sold in Spiritleaf locations through the first quarter, and we continue to see product penetration momentum in the second quarter of 2022. Finally, our 5th initiative is analytics and insights. With over 350 retail locations and thousands of daily shopper transactions, we have a unique advantage as one of the largest vertically integrated players in Canadian cannabis. These shopper insights are now being deployed with our franchise partners, other licensed producers, and our retail customers nationally, as we look to take accountability for a healthier industry dynamic for all of our stakeholders. We look forward to sharing some of these important capability building initiatives through advanced analytics and insights at our upcoming Circle event next month. In summary, we remain focused and consistent in our approach within our cannabis operations division. While the industry continues to evolve, we believe our differentiated strategy is on target and beginning to show proof points of sustainable progress moving forward. I will now turn the call back to Zach for closing remarks.
Thank you, Andrew. Our goal is to deliver sustainable profits and returns to shareholders through 2022 and beyond. By focusing on fundamentals and executing a contrarian strategy relative to our peers, we believe that we are in the process of setting Sundial up for success. We have significant work ahead to reach our goals, and the path forward is unlikely to be a straight line. Through a vertically integrated model and an unapologetic focus on the Canadian market, Sundial is on a differentiated path towards consumer delight and the creation of shareholder value. I'll now pass the call to the operator for analyst questions.
Thank you. We will now begin the analyst question and answer session. To join the question queue, you may press star then one on your telephone keypad. You will hear a tone acknowledging your request. If you are using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star then 2. The first question is from Frederico Gomez with ATB Capital Markets. Please go ahead.
Hi, good morning, guys. Thanks for taking my questions. I guess my first one is on your buyback program and this plan of selling puts against your own stock. Is there a metric or metrics that you're looking at to buy back stock? Is it going to be based on book value per share or net tangible book value, or some other metric like that we should be looking at? Thank you.
Thanks, Federico. It's Zach. We're not going to give out specific metrics on the buyback. We will have significant transparency as any purchases or transactions require filing in line with securities regulations. So the market will be well aware of the transactions and where they are, but don't want to get into trading strategies on a public call at this time. Thanks.
Okay, understood. The second question is just looking at your investments here in Canada, your stake in Village Farms and Balance. How are you looking at those investments right now, just given the decline in the stock prices? If you look at Balance, for example, stock's down, 90% of the last year. So, the amount that you paid for your stake, could now potentially is the market price of the company right now. So I'm just curious on how you're looking at those investments right now. It seems like the market is offering some great prices there. So just your strategy going forward. Thank you.
Sure. So certainly the mark-to-market impact across the space, but with those two securities specifically, has been painful as of late. But it also creates an opportunity, especially if you're thinking about potential industry consolidation or M&A. All else being equal, if you were looking at these companies as potential acquisition targets, you would welcome the decline in prices. So specifically, we see some very interesting capabilities with both Village and Balance. Balance is a very unique, has unique manufacturing and processing capabilities in terms of 2.0 products, and Village Farms is a very well-run upstream cultivator with extremely attractive cash costs of cultivation in their British Columbia-based operation. So again, we do expect a further consolidation in the industry. The timing is sometimes difficult to plan, and there's many reasons why otherwise, good transactions can stumble or not get done. But we think that you're going to see further M&A in the space, and don't think that the Alcanna transaction is necessarily the last acquisition that Sundial engages in.
Thank you. That's really helpful. And maybe just if I could squeeze one more question here. On your SUNSTREAM portfolio, you mentioned that it's mostly fixed rates. Can you give us a sense on the weighted average fixed rate of that portfolio, and could you comment on the potential risk to your real rate of return there, just given inflation and rising interest rates? Thank you.
Sure. Jim, do you want to comment on average yields in the investment portfolio?
Sure. Thanks, Zach. Our weighted average return on the portfolio is around 13%, and I think we disclosed in the press release that the impact of the fixed rate changes was a little over $6 million in Q1.
I don't hear anything. Can you guys hear anything? I don't. It seems like it was dropped. Here, I'll hit refresh. Yeah, it looks like it was dropped for some reason. Well, I will stay tuned.
States are starting to go through their own cycles, and as some degree of oversupply and saturation impact these markets, there are pricing and margin pressures out there. That being said, we're quite pleased to be, for the most part, at the senior point in the capital structure for these companies, and are a strong partner to help them work through consolidation and other business improvement efforts that they have on the go. And we've previously announced the commitment that our board has made to the SUNSTREAM limited partnership fund and strategy, and there's no intention to update or increase that at this time. Still working on the existing portfolio and building out the previous allocation.
Okay, thank you for that. And then for a follow-up question, we realize that the company now has 4 verticals, but would you consider entering the cannabis tech and or fintech space in a large way?
Our sole focus right now is really the integration of this transformational 𝗖𝗢𝗡𝗘𝗖𝗧 transaction. So, we do see a number of potential business opportunities in other lines, but really trying to stay focused on our knitting right now in terms of proper integration and getting our feet underneath us and really showing the market and our investors the benefits of this vertically integrated model. And thereafter, as we get to a more stabilized rate of profitability, we'll be able to lift our heads up and think about other opportunities, but we're really not looking to get outside of the 4 segments we're working on currently.
Thank you.
Once again, if you have a question, please press star, then 1. This concludes the question and answer session. I would like to turn the conference back over to Zach George for any closing remarks.
Thank you, and thanks to all for your support in joining our call. We look forward to updating you on our progress in the near future. Have a great day.
This concludes today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.
Okay, so that was interesting. Some good takeaways, some not. Let me know your comments overall. I think my first impression would be it's mixed. It showed that things are improving. They're reducing costs as best as possible. The negative is that my impression at least was that the forecast for 2022 is going to be kind of glim or gloom, whatever you want to call it. A lot of you guys are commenting about the puts. That even reading the earnings prior to listening to any of this, that was one big question, because options in general can be conceived as a little bit more of a gamble. So in case you guys don't know options, what happens is that if you choose a strike price and you are selling it, if it is below that, then it gets exercised. So most likely in their case, they are going to choose a very high strike price. And I'll just show you some of the options activity first. And Jimmy, that is a very good question. But options activity. So for instance, even doesn't matter about the expiry date or anything like that, because that's something that's what the analyst asked as far as when, because your options can be conceived as, like I said, a little bit more gambling. And that's why the analyst did say, like, what's your strategy? How are you going to be doing this? So for instance, ones that are expiring even this Friday, again, taking the factor of what is happening out, there's different strike prices. So 50 cent, $1, $1.50, $2. So to be safe, they need it to do basically, they'll probably do 50-cent strike prices. That way it gets purchased at 50 cents. And how it ultimately works is the last price is 7 cents. So that would get subtracted off of the 50 cents. It's interesting to see the fact that they are selling puts and that actually got approved, because I've never seen any company ever do that. And I think 𝗖𝗓𝗡𝗘𝗖𝗧 is doing it very different as well. Even their whole 𝗖𝗓𝗡𝗃 situation, how they previously talked about how they are going to be, they took that cash, part of that agreement, and converted that to be part of the buyback. So it's interesting to see them all do these kind of things. It's very kind of Wild West, potentially. It's like them doing what they want, which so far is getting approval. It's getting done. One of you did ask about a reverse split. I don't think they're going to bring that up, because previous earnings, they kind of gave as much transparency. They said that if necessary, they will do a reverse split prior to, I believe it's August the 9th. That's when they are set to delist. Actually, most likely it'd have to be about 10 days prior to that. So they have to be over that $1 mark for 10 consecutive days. So early August, most likely, that's when they potentially would do a reverse split, if we're not close to that, or if we're not around that $1 mark. So that's something for a lot of investors. But I think some good takeaways is that, yes, if you just read this, you see that SunStream lost 17 million, which is big. But they did, I wrote down, they made, They made 4.1 million from SunStream, so that's a good takeaway. And that 17 million of losses wasn't all from Q1. That was jointly from, because it's, I guess, their fiscal year end, probably for taxes, so they were selling a lot at a loss. So there's a lot of similar to what we invest in. If we're at a loss prior to going to taxes, if we didn't tax loss harvesting or selling, whatever terminology you want to use, they did that. So that 17 million loss, I think reading this, people would see that. So when he said that, I noticed that the price jumped up a little bit. So it went from, I think, 4 to around almost 3. So it gained, I think that was a very good takeaway from that. Reading this, like I said, people would assume that they lost 17 million because of SunStream. So there's that. They clearly are betting a lot on 𝗖𝗓𝗡𝗃𝗃, which I've always liked SunStream about their alternate sources of revenue. So SunStream, and also 𝗖𝗓𝗡𝗃 now, part of the mix, part of outside the cannabis sector, because he clearly even said cannabis is going to be struggling 2022. They're trying to reduce costs and be more profitable, make it brand marketing, as he said that around 3 times. So clearly they are focusing a lot on brand marketing. But I'm interested to hear your guys' takes. What do you guys think? Exactly, Tyler. Yeah, ideally, best case scenario, they won't do any reverse split whatsoever. But yeah, like I said, I'm interested to hear your guys' take on all this. But overall, though, I believe it was Jimmy. Someone said about shorts. So just want to give you a quick update on short interest. It was actually at 0, so pretty stagnant. And similarly right now, unless Ortex isn't updating, it's very laggy right now for Ortex, but it does look like it's updating, so 31, so nobody really knows where it's going. Better than expected retail sales numbers is out, which obviously Sundial is very linked to obviously consumers buy a lot. We need consumers to have a lot of money. We need them to be spending a lot of money. Hands down, that's always what matters to us. So I think the plain and simple, seeing these numbers caused us to go up a lot, because even looking at the pre-market yesterday, after hours, people's interpretation of this earnings caused it to go down roughly about 11%. You know what? I agree with you, Tyler. It's just a fine line. Once we easily get over this $1 mark, if we can, especially if it's natural and not doing a reverse split, it's like, as far as on the technical stance, we can easily, once we get over that $1 mark, we can easily get to 150. 150 is very strong resistance, and we've typically in the past, in 2021, have failed to break past that 150 mark. So I think that is going to be something that we need to watch for. But if we do get over that 150 mark, I agree with you. It's going to be similar to what previously happened, the epic rally. But I think it's our time to shine. 2022 is going to be a good transition period away from cannabis, because cannabis is mixed. Once it gets legalization, and Sundial is going to be one of those hot ones. And I always bring this up, and all the time. And for those of you that do watch my channel, obviously my videos on Sundial, make sure you do subscribe. If not, I have brought this up and I've compared a lot. So this is the largest cannabis companies based on market cap. We all know right here it is dropped a couple of points. Is number 10, Sundial. So I've compared in a video as well. Like for instance, Tilray, Canopy, a lot of others. I've looked at their balance sheet. We have just as much spare cash as them, but yet a fraction of the debt. So, for instance, in Canopy, I believe that they have roughly about, I think it's $3 billion in debt, or close to that, $1.2 billion, sorry. And Sundial has no debt. So, goes to show that I agree with the analyst, and that's interesting as well. The analyst said that he even thinks that it's trading at a substantial discount. So I agree with that, because Sundial, compared to any of these other companies, are massively, completely killed, so much more. And like I've said, even in previous ones, I do anticipate probably a little bit more analysts jumping on board. So whether that analyst does go back and give a reiterated target, whether it be a buy or maintained at neutral, it'll be very interesting, because I do believe, I don't remember that analyst where he's from, but he's definitely not from one of these. So, but usually analysts are fairly conservative as well. So the fact that all of them put together have an average of 72 cents, which is a 60% off or upside potential, I don't know. It's exciting. I don't think anyone could ever disagree and sit there and say Sundial is a losing company. Well, it depends, Tyler. If depends on when, like, because to buy the shares back cheap, they would have to do it that's an interesting mentality, though. They might have done that. But especially now that they're doing selling puts, I don't think they would want their company to stay as low as it does. And I've been watching a lot of, this shows anything over 25,000 in premiums, and it doesn't look like anything has been done for Sundial. So, as of yet, doesn't look like Sundial has done any puts, or sold any puts, I should say, clarify. So, but I agree, maybe that might have been the case, Tyler. Bring the price down, that way they can buy cheap. And exactly, Jimmy, they need to. It sucks that they have such a good business model, but yet it's, because of it being a Canadian company, it's limited to only doing a partnership in the States, which we all know States is where you have the money. So I think it's just a matter of time before legalization comes. And then once the legalization comes, then now Sundial's cannabis component, so one of the 4 kind of subsectors now, is going to flourish. So I think SUNSTREAM, despite the loss, it is very much profitable. That's what they pointed out, that on average it yields a 13% return. So oddly enough, they didn't really bring that up in the actual earnings, like on the actual printed earnings. It just, like I said, 17%, $17 million loss from SUNSTREAM. But yet, like I said, 13% is their average return, and just in Q1 they made 4.1 million. So I don't know. I still like 𝗖𝗓𝗡𝗘𝗖𝗧. They're outside sources of revenue. 𝗖𝗓𝗡𝗧, SUNSTREAM, and I agree with you guys. Once they start selling, like within the states, once it gets legalized, then that sector will now flourish big time. But yeah, as far as on a price point, looking at the volume live ticker, almost 71 million just in the first 2 hours of the trading day. So significant amount of volume is getting in. Block volume shows and represents institutions buying, so 39 million shares being purchased by institutions just today. And you can tell based on the 13 Fs that have been coming out, a lot of big money has been buying. So I believe it came out yesterday. There was a brand new position that just was formed, I believe. They have well, here's Booth Bay as well. They increased 119%, but a lot of institutions as well are completely getting in. There was a new one right here, EFT managers. They increased at 162%. They have 77 million shares of Sundial, which they are now, I believe, the biggest holder of it. So I think no matter what, institutions purchasing is a very big thing, and it's going to be very beneficial for anyone who holds. Yeah, exactly, Tyler. Yeah, so he did a backwards way of the 54 million that was attributed to the 𝗖𝗓𝗡𝗘𝗖𝗧 deal that was supposed to be paid out in cash. He just used that and broke it down, saying that was going to be the equivalent in share buyback. So it's interesting. I think more companies probably need to do that, because there's always expenses that companies incur that they could just say, you know what, that's part of our buyback. I think that's a genius idea. The put option, or selling puts, that one's interesting. Like I said, I've never heard any company ever do that. So I don't know. That component is very, very interesting. And my apologies. I guess I realized I was on the wrong screen, so you did not see this. But I did break it down. So EFT managers right here, 77 million. They increased 162%. Then there's 𝗖𝗓𝗡𝗖𝗧, 315%. They increased 33 million. There's a lot of big money getting into Sundial every single day. Shows there's a massive amount of volume, massive amount of I believe even technically our intrinsic value and our book value is 35 cents. So just keep that in mind. The fact that we're at like 44 cents right now, we are massively undervalued, which, like I said, the analyst even said that. He even said, you know what, what are you guys doing? Like, you're extremely undervalued. I think he was looking more for an answer like, are you guys in talks with someone? I don't know. But make sure you guys hit that thumbs up, subscribe. I just wanted to do this fun earnings with you guys. Again, a lot of good takeaways. I liked it, and I think it shows that the future for Sundial is very healthy, and their other outside of sources of revenue very much profitable. They still intend on doing that full share buyback, which in my opinion hasn't really been factored fully into the price. And if you guys do like a lot of, like, for instance, that analyst view that I showed you, like right here where you see a lot of analysts and everything like that, just click on this link. Has a lot of good information on there. And like I said, if you are looking for even ownership breakdown, it goes over absolutely everything that you need to know. So I usually use Interactive Brokers for a lot of good info. But with that, like I said, make sure you do subscribe. It does look like the market is going down right now. 7% is a very volatile ride right now for Sundial, which is unfortunate. So clearly the market does, there's a lot of people. And actually, one final parting thing, I just wanted to show you, just to rule it out, see if shorts are possibly getting in right now. Nope, still 0%. Okay. But like I said, with all that, don't forget to hit that thumbs up. I appreciate you guys all watching, and let's all make a lot of money on Sundial.